Welcome to Ecn Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extended losses from Thursday, sliding to a 3-week low as the US dollar firmed in the wake of Powell's remarks. Traders were left wanting after the Fed chairman offered no clear dovish signal for November, instead stressing that while labour market risks are rising, inflation remains elevated and policy is not set on a fixed course. With a few domestic drivers in play, the Australian dollar is being driven by US data, particularly core PCE and the upcoming Fed commentary on Friday. Along with this, risk still settles with the RBA after the recent data does put a bit of a cloud over next month's cut. But overall, as the weakness comes into play, support looks at 65.30 and beneath there looks towards 64, 65, 75. We are getting oversold, so I do anticipate the market to bounce very soon. Turning to the euro, the market has slipped further following the strong US data lifted by the greenback. The jobless claims dropped to 218,000, while GDP was revised higher to 3.8% year on year. And the durable goods orders surged to 2.9 in August, reinforcing confidence in the US economy. The DXY presently is around 98.5, which has further pressured the euro and now crushing the trend line, as we can see here, which is exposed a little bit more to the downside. Looking at the support, now comes in around 116.60 or to 116.10 before any reversal. There is a bit of work to do on the upside. Let's see if the market can play to a bounce, and if so, look towards the region of 117.5 to 118. Well, dollar yen rallies into the third consecutive day as the trend strengthens as also. But are we approaching a bull trap? You've got to be careful when you look at this type of candle when it gets towards this range. We may see it again and therefore look heavily to the downside. I still feel to the top side. How far could this market squeeze? Well, I think we're getting very close to the top side now. And hopefully we should see a return of supply and seeing the market head lower. Turning to sterling, the market is weaker. It still looks like it could head on towards the region somewhere around 133.30 to 132.70. Where I've outlined here, the market could bounce and see a small recovery to 135. Wrapping up with commodities, well, the market weak for one day and finding demand once again. With the risk is still turning to safe haven demand. We do have the core PCE inflation data later today, which is the Fed's preferred inflation gauge. Let's see if the market can inspire further bullish activity and look on towards the region somewhere around $3,800 to $4,000. Wrapping up with oil, the market still remains somewhat bullish as it now looks towards a challenge of 65 to maybe onto $66 a barrel. Technicals, though, aren't fully confident, but as you can see from this range of 61.5 to 66 has continued to play out, and I feel that we could see this again and see a topside rejection very soon. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.